Hi, this is Annette with an overview of the environmental impact investing market and a bit of a story in how, in my view, it stands to change the game. There's been two recent reports that have looked into issues around the financing of conservation work. One called Conservation Finance was authored by Credit Suisse, an investment bank, WWF, and McKinsey, a management consultancy company. And a second was primarily through TNC's NatureVest arm with a bunch of other authors. They both dealt with similar issues and came to similar conclusions, but I'll focus in on the Credit Suisse report. It looked at how much money is being spent now around the world for biodiversity protection and estimated it at around about 50 billion. So that's around 40 through government and philanthropic sources, and then around 10 through a variety of investment vehicles like agroforestry and water licensing schemes and the like. So a lot of money. They then acknowledged the difficulty of trying to size how much money is really required, but they ended up with an estimate of 3 to 400 billion per annum, and quoted a bunch of references as to how they came to that conclusion. So the gap between the money available today and what's really required is pretty massive, $2 to $300 billion per annum. So where money come from? Well, the only place that kind of money is available is in the capital markets, and they concluded that it's actually not that much, that there'd be sufficient capital available to meet this gap if the main investor segments, so that's high net worth individuals, retail and institutional investors, allocated just 1% of their capital to conservation projects. So it seems like a huge amount, but it's actually a tiny amount compared to the total capital markets. And so their broad conclusion was that there's actually no shortage of investment funds. The shortage is in investable projects, having places to put that funding. So they went on to say that in their view that the conservation sector, is quite a ways behind other social sectors in the field of impact investing, where a lot more ground has been made already, and that collectively we need to increase focus on project management, defining and managing projects, and measuring the results of those projects. And within the report they quote some ways to go about that, and they mention the open standards as a platform for improving that project management and for measuring the impacts of that work. So Credit Suisse and McKinsey have just produced another report just last month, January in 2016, that builds on that earlier report. They've gone into quite a bit more detail, focusing mainly on the financing side of it rather than the conservation side. Provided a bit more detail about how the funding vehicles would work. They talk of how a range of investors, multiple investors, could put funding into a vehicle managed by a funder of some sort, which would then fund a range of conservation projects. In turn, they would produce returns of various sorts, so real cash flows, financial cash flows, but also conservation impacts, and that then, in terms of financial returns and non-financial returns, would flow on back to the investors. They identified what they call some paradigm shifts which need to occur to allow those kind of vehicles to start taking shape. So incubating, scaling, mainstreaming, basically taking projects from very early stages through to scaling them up and then mainstreaming the whole concept. And they provide a fair bit of detail behind that. But their conclusion is that if those shifts can be made to happen, and they believe they can, in total they can provide the gap of funding that they've been talking about, the $200 to $400 billion between now, 2016, and 2020. So really not that far away. So the market's starting to take shape. There's a lot of work to make it happen, but there's some really good thought going into just how to make this happen in the conservation space. It's already happening in other social sector areas. So just a bit of the infrastructure that's around to support impact investing. One of the key players is the GIN, the Global Impact Investing Network, which is made up of a whole lot of funders, investors and funders that are researching and providing information about how this market can work. They also provide a set of metrics called IRIS, which help to define how impacts can be measured on a whole range of different factors. The metrics are all available online if you want to have a look. They also have a bunch of what they call aligned metrics, and there's a component within here that was developed a few years ago for land conservation. It's primarily geared at things like land trusts and the like, but there's quite a range of metrics already embedded into that system and available for use. Probably needs some broadening to cover different types of conservation work, but there's a pretty good base there to build on. Another component that the GIN put in place is this impact base, which is an online database of investment funds. It's primarily geared at investors so that they can find funds, but it's also for fund managers to communicate to people about the details about the funds that they're providing. Already there's 104 funds in there that are being tagged as being within environmental markets of different types. Just looking at one example to illustrate the concept, this one's operating in Madagascar. It's aiming 3 types of activities around managing high conservation value areas within Madagascar, some agroforestry programs, and some energy programs that are around reducing deforestation. They've defined a bunch of metrics that they're going to be monitoring their performance against, things like greenhouse gas emissions, species, protection of ecosystem services, livelihoods and the like. In total, they're aiming for $45 million to fund these activities in a range of areas. And importantly, the way the financing vehicle would work is that they basically pay on performance. So it's changing the funding model from being traditional philanthropic funding to pay upfront for a project to be done. This is basically paying for results, so really increases the importance of being able to measure for results and demonstrate impact. Another collaboration within this space is the Conservation Finance Alliance. It seems to be going through a bit of a transition right now. It has been well funded in the past. Right now, WCS is providing the secretariat for it, and they recently put a call out. They'll be at the Environmental Congress in Hawaii in September, the IECN Congress, and looking for collaborators on workshops and the like for that. So that's a quick overview of the environmental impact investing market and how it's coming along. It's still playing out, obviously, and it will play out in all sorts of ways that we don't yet know about. My concern is that we're still struggling to perform well down in this space of today, when what we really need to be doing is lifting our sights and being able to perform well up in this space, because that market's growing and is going to be happening